All right. Welcome everybody to Tank Talks. I am Cinthia Murphy, head of research for the ETF think tank. And today I'm super excited because we are diving into a really interesting piece of research from the CFA Institute, talking about the future of work in the investment industry, which is something, if you've been in this business, we talk about all the time, how roles are evolving, how the environment is evolving. And the CFA actually went out there and did some really interesting research on what that looks like. And joining me for this conversation today is Rebecca Fender. Rebecca, I know I'm going to butcher your title. It's such a long title, so I'm going to read it because I really want to get it right. Rebecca is head of strategy and governance for research, advocacy, and standards at the CFA Institute. She's also co-author of this study, Future of Work. Welcome, Rebecca.
Thanks. I do a lot of different things, but writing about interesting trends is my favorite. So thanks for having me.
Yeah, no, this is a fascinating piece of work. If you haven't seen it, check out the CFA Institute website and look for Future of Work. It's a three-part report breaking down into context of work, the culture of the work environment, and the content of work. And the whole thing, the whole premise of this conversation is about how the pandemic pushed us into remote or hybrid work. And that was a catalyst for all sorts of changes across the industry, across different roles. And so let's get into that. So Rebecca, can you start by setting the stage of what this report is about? Why is it structured into three parts? I mean, how did you guys go about building this?
Sure. Well, we've been interested in the future of the investment professional for many years. So in fact, parts of this report go back to one that we did in 2019. So we have an opportunity to look at what are some of those trends that we've been talking about for a long time that have now accelerated, and what are some things that have completely changed in the industry. So as you noted, it's about changes in roles, changes in skills, and changes to teams. And we thought it was helpful to have the conversation first about where work happens, because that's certainly been disrupted over the last few years and people have found new ways of working better. And so that was the context of work, how the hybrid model applies to the industry. McKinsey says this is the best industry out of all to do hybrid well. So we wanted to test that hypothesis. And then in the culture area, we know that building a great firm requires culture, and oftentimes that means stability, which is not the era we've been in here. And so what do leaders need to do to make sure that the important parts of their culture they keep, and the other parts that maybe they need to adapt, they go ahead and do that. And then the last part around the content of work is really what work we do. So how are skills changing? We see especially around sustainability and different ways of working with data. So whether it's artificial intelligence or other approaches, that's something that's of significant interest to our audience, and we wanted to see what's next there.
So before we get into some of the finds, can you clarify, because investment industry is a really broad term. So can you tell us who exactly this report covers? So is it, and I know there are tables in the report, but for the sake of those who haven't seen it, is everything from an equity trader to a financial advisor to a CIO? Like, who is the investment professional that is included in this overview?
Sure. There are many different roles covered, and I would say if I had to name the three that are the most prominent in the group, are probably financial advisors, portfolio managers, and analysts of various types. And so I will note that the research draws from some survey findings across our membership. So we have about 180,000 members around the world. And so it's global and across ages and so forth. But anyway, about 11,000 people participated in some way in the quantitative part of this. And then we did some roundtables with hiring managers and others. So we look at both the buy side and the sell side. So those working at asset management firms and investment banks, both are important in this. And again, I think a little more than a third of our members in North America are in the private wealth area.
So let's get to what you found. Right away, when you're at the very beginning of the report, there's this comment about how hybrid work or remote altogether could actually impact everything in this industry, from how effective we are to how good we are to even investment performance on some level. So, tell us about how this shift to hybrid, which could become permanent. A lot of people don't want to go back to the office anymore. How is that actually impacting the effectiveness of the services investment managers and investment professionals provide?
Well, we thought it was particularly interesting to look at the essentially all remote context that most organizations were in during 2020, 2021, and so forth. And so one of those key questions was efficiency versus effectiveness. And so we asked our members, how efficient were you during fully remote work? Was it more or less efficient than previously? A little more than 50% said they were more efficient. About 20% said they were less efficient, and the rest said about the same. But then we also asked, what about those who report to you, if you have any direct reports? And there, only about 30% said they thought their direct reports were more efficient. Most said, about 40% said that it was the same, and then the rest said less efficient. And so one of the things that just points to is there is an efficiency perception gap. So we think this is particularly important as people think about career progression and how you work with different colleagues. So you can be, we know that people did a lot of work. They were burning themselves out, working extra hours and so forth, but there's still this perception if we don't see and talk with each other regularly. So the recommendation we would have is to make sure you do proactively communicate with people and set very clear goals. I know performance management has also been on the sort of staff side. Performance management has been either different, or some organizations have even paused traditional performance evaluation during this time. But now that's starting up again. And so those are things from a career perspective that we advise on. But then the other thing is what's most effective for the industry. As an organization, CFA Institute, our mission is for the ultimate benefit of society and to have the best investor outcomes possible. So is this good for clients? We wanted to know. And so it's just been amazing how quickly everyone has adapted in the industry. We had to, but figuring out what's next for hybrid in terms of client relationships, I think that's one of the areas where efficiency versus effectiveness, that it's not a simple mapping. So we found, for example, in our, we do a trust study every couple of years with investor trust. And we asked individual investors, do you need to meet somebody in person in order to trust them? And about 60% said yes. So we know there have been plenty of people who have gotten an advisor during this time or changed an advisor and maybe didn't have that benefit. But as relationships go on over time, there's a trust factor there. And so we have to really rethink the way we communicate with clients and with colleagues. So lots of different ways that our work is changing in that regard, even before you get to other skills.
Yeah, and what's interesting is that what I love about this is just this idea that is the perception of effectiveness versus the reality of it. I've worked remotely for many, many years, and the company I used to work for switched hands many times. And I remember many times sitting in management team calls, and I was the only one working remotely, and nobody believed it could work. And it wasn't until the pandemic hit, everybody's working remote, that all of a sudden went, wait, we actually can do this and we can do it well. And sometimes it has nothing to do with reality. It's just the perception is the hardest part to change, which I would think in this industry that is so relationship centric. I mean, the financial advice, trading, everything is about that relationship. I mean, how do you change this trust component? It's kind of fascinating because it's a challenge that's not easily overcome.
Right. And back when you originally set up that remote working, I'm sure you had to be an exception to the rule. And that's not the case now. As we've again, surveyed employers, the strong majority, at least 75%, say it will be business as usual to have remote and flexible working. And they recognize that's what's needed today, and it can work. We've proven that. But I would also note that we've asked investment professionals, what is it that motivates you in your work? And back in 2019, when we asked that, flexibility was not a big motivator, but it, of course, has increased a lot since then. So I don't even think it was something people asked about as much or thought about as much. And now it's very much the conversation. You can talk about what might work best and try to optimize together with your employer.
Yeah, I guess you don't miss what you don't have, right? Now that we all have flexibility, by golly, we're not letting it go. So it makes sense. So before, I wanted to dive a little bit more specifically into the RIA aspect of this conversation. But before we go there, when we talk about changes and just changes in perception, all that, in the culture of work environments, there's a really interesting statement there that talks about how the investment industry is very averse to change. It does not like to change. It does not like to break new ground. And it often only does it when it's forced by some kind of catalyst. Like in this case, the pandemic really forced us to rethink things. And I'm just curious, like, where does that come from? Because in a way, we're the industry about fintech innovation and new tools, and we talk AI and all this kind of stuff that is really pushing the envelope on breaking new ground. So as an industry to be very set in its ways, it's almost like a conflict there that it's kind of fascinating.
Yeah, I think the culture of the investment industry is fascinating because, as you note, there's this element where we have to change. It's a very dynamic industry, and many of the reasons that people want to be in it is because of that intellectual curiosity. It doesn't get boring, even as people get further on in their careers, where you think, oh, well, you've learned a lot. Maybe it's not as exciting day to day. It's even more so, people say. But then on the other side, think of the big buildings that characterize your impression of what a bank is or what a financial institution is, and all of the things that provide security and confidence in the system. So you have these two different pictures coming together. So we know that markets are inherently uncertain, but the industry does need to provide some stability and continuity. So making huge changes doesn't tend to work well. If you think about manager selection amongst asset allocators, they'll put a manager on watch if there's too much turnover. And that's something that we heard more as a concern around the Great Resignation and so forth. So change can have a negative view, but then there are all these other tools, like you mentioned. And so one of the things we've asked is it good for the end investor to have things like new digital products or more technology and so forth? And we find a very strong positive correlation between using technology well and trust in your advisor. So it's not the people versus technology trade-off that sometimes we think of. In fact, they work together really well. Now, if you don't use technology well, if you're not seen as being on the cutting edge of what's happening, that is a risk. And so I think the stakes have been raised there, and there's a higher baseline expectation for innovation, but being first is still risky.
No, and it makes sense. But so from that perspective, when we talk about, earlier you're talking about how now we really value flexibility as an industry. Are there things like, there's a lot of commentary in there about values and sustainability and, to your point, technology. Do we, as an industry in the various roles, do we expect more today from these jobs, number one? And does the end client expect more from this industry as a result of everything we've lived through in the last couple of years? Or do you think that's kind of a steady line? It doesn't change a lot in terms of how do we define success? Do we feel successful? Are we meeting different metrics? Is that conversation evolving as technology evolves, as sustainability demands evolve, as values change, diversity, all these conversations?
Yes, I think that the conversation around purpose, why is it, well, why do we do what we do, is more and more important. So if you think about it at the highest level, the investment industry and finance more broadly exists to increase wealth and well-being for society. And you can see it in the different projects around the world that get funded in various ways. People make decisions about how to effectively allocate capital. If you go to a country that doesn't have a well-functioning financial system, it's not a place you want to be for too long, because it is so important for really the fabric of society. Now, having said that, I think the stakes have been raised in terms of expectations. So if we can get more data now, and especially new forms of alternative data related to sustainability and so forth, we have more information to use to think intentionally about where we invest and what impact that has, both in the short term and the long term. So I think that that's important to clients, and more of them are asking the questions. And it's important to those in the industry. So I don't know that we've always been that great about making the connection to why it matters, right? You know, if you look to Hollywood, they usually don't paint finance in a very good light, but in reality, this is what funds everything. And so being involved, helping to make those decisions is really exciting. And I also like to think of a lot of the work of analysis in investment management is almost like being a detective. You need to think about what are the things that are going to be happening and shaping the world going forward. How can you help move those things along? And there are just a lot more possibilities than maybe we considered in the past.
That makes sense. So let's talk RIAs. I think it's kind of fascinating. There's a lot of on the rules specifically, a lot of interesting stats there. So for example, if there's one line there that says people newcomers to the investment industry today are 5 times more likely, right? 4 or 5 to go into private equity than investment banking. Where does the advisor fit into this desirability component, if you will? Why is demand for different roles changing? Is it related to market environment? Is it related to where people are seeing more opportunity for career growth or for quick returns? Or what's driving this demand shift for different positions?
I think there are a number of factors that play into it. So certainly there's been significant growth in the private equity market, and so that gives more opportunities. I think the other thing is that there are even amongst, so in the RIA area, you've got clients with a diverse set of needs. And so as they look for different opportunities, one of the ways an RIA can set them apart, set themselves apart, is to offer different investment opportunities that aren't available to everyone. And so that's really where private markets are differentiated, and you need access to get to different types of opportunities. So as we think about what are the ways that RIAs add value, access is one of those areas. And the other thing is, of course, to help people manage through volatility, which is certainly relevant nowadays. One of the things we have also done is we asked, if you just look back to March of 2020, when there was a big shock to the system, we asked people, what advice did you get from your advisor on whether to add to your sort of risk portfolio, say stocks or more risky assets, or decrease or keep it the same? And then we asked, what did you actually do? So that was a good example of when you have a trusted advisor, do you really trust them? And we found that most people, about 3/4, did do exactly what their advisor recommended, but about 1/4 did the opposite. And especially if they were told to add more risk when markets were down, because that's the more difficult thing behaviorally to, you want to flee, but you have that guidance to say, no, this is the time when you can really make a big difference in your outcomes overall. So anyway, I think that there are so there are different skills too that I think that are more and more recognized as important in the industry, and especially amongst RIAs. So if you just think of that example, there's communication, there's negotiating, and helping to put things in the right context. So anyway, that's in a lot of organizations too. On the institutional side, I think they talk about solutions departments. So again, that's thinking much more holistically about what's the best for the end client.
So is it too simplistic or a mistake to just take away from your statistic that a quarter of people did not trust their RAs enough during the crisis to really do what they're being told to do?
I think that's the conclusion you could make.
Well, take heed, advisors. That's interesting. That's a large percentage if you think about it, because I think investors tend to be the relationship tends to be a cornerstone of their investment process, and they tend to be long term. So a quarter seems high to me, but maybe that's just another catalyst for change, I suppose.
Yeah, and I think that understanding your clients and what messages are needed is it's always been important. But as you think about scaling up your business too, and what can you automate, this is even more interesting. So actually, several years ago, I spoke with somebody who was at a robo-advisor, and they said, typically what we would think is that if the market has a shock, we would send a message to all of our clients and say, "Don't panic, it's okay." But he said, what we do is we actually go in and we see who's been logging on recently. Who do we think is nervous? Because if we just send the same message to everyone, we might start some panic where people weren't even thinking that there was so much of an issue and they were ready to ride it out. So I thought that was an interesting way of thinking about client mindset, what's needed for the end investor, and using technology and new data well.
Yeah, at the end of the day, it's, automation technology, it's scaling businesses, but relationships are one-to-one, and no two clients are alike. And I think that's the art of this business, that science can help you find the right solutions, but it really is an art. Relationship is an art. So it's really cool to see the advisors who do it well. I wanted to ask you about, last time you did this study was 2019. And at that time, we were talking beforehand that advisors, the RIA space, the financial advisor space, was one of the roles within the investment industry that was most likely to change or undergoing a change. And now this year in this report, it's the least disrupted role within the investment industry. CIO, CEO, trader being the most disrupted. So I'm just curious about that. What happened between 2019 and right now, where the advisor space was undergoing major transition, and now it's good?
Yeah, I think it draws upon some of the topics we've talked about already, in the sense of how do I use technology well? So this has been the last several years has been an important time for organizations to figure out both their user interfaces and their methods of communication, and also their analytics overall, and those of their partners. So I think there has been a lot of change since 2019 for the advisor role. And then also, if you think about, again, the client relationship side. So these were changes kind of forced upon us, but everyone had to adapt. And so there will still need to be new ways of thinking about client relationships down the road, as we discussed. But a lot of that has had to happen in a very compressed time frame. So, so that's, I think, one of the reasons that people were anticipating change back in 2019. They've seen a lot of it now, and I think they feel more ready to adapt. This is just the word of the next decade will be adaptability, and the RIA audience has had a lot of practice already.
Practice is good. So Throughout the report, as a final thought, Rebecca, throughout the report and all the three parts of it, there's a lot of recommendations that the CFA makes, from everything from skill sets you may want to consider to, you often use the word creative to describe what kind of leadership this industry needs going forward and how to be a creative leader and what does that mean. And so, if we look at the report in its entirety, what are some of these recommendations that you would like to highlight that you think, from CIO to trader to equity analyst to advisor, what are are there things that are universal that we need to be either investing in if we're trying to recruit talent, perfecting if we're trying to grow our professions, and doing better if we want to serve the client better?
Sure, there's a lot to cover in there. Well, and actually, let me make one quick point about the term creative, because I thought one of the most interesting findings was we asked all these different investment professionals, does your job involve a lot of creativity? And about 58% said yes. So I think the impression of a lot of these roles in the investment industry might be it's all about the quant and the numbers and so forth. But then if you layer on that interpretation of that or understanding the context and basically the qualitative and the quantitative aspects of this job, there's a lot of creativity needed. So I think that's important for thinking about the next generation of people into this industry, and we shouldn't lose that. So that's just one quick note. But in terms of recommendations overall for investment professionals, I'd first just say be flexible and more agile in terms of what work looks like for you. And if you think about what the what's going to work best, you'll have to think about what works best for you, but also think about your team and about the others who depend on you. So I would say optimize more for the system, and that should work well for you longer term. And so, communicate often and nurture your network. We found that Microsoft did some interesting research with their Microsoft Teams, where they found people who you're really close with in your network, those relationships have gotten stronger, but more distant relationships have pretty much gone away. So be really intentional about your network, especially as you think about next stages in your career. Don't count on those relationships that might be a bit, that might be aging a bit in terms of being maintained. So be flexible, continue to add new skills and refresh the ones you have. We didn't talk about that area as much in here, but the top areas there were around different ways of working with data, so artificial intelligence, machine learning. Recognize there will be more data scientists in this industry going forward. And then sustainability, climate, impact, all of those areas, we know that clients are asking more and more on that. So refresh your skills, and then also think about the ways that you can develop some specialist skills along with really the need to be a generalist. The RIA, many of the roles at an RIA, you need to know a lot about a lot. And so having a great network that you can draw upon when there are really technical topics to bring together is important. And we call that T-shaped skills too. So if you think about the letter T, so you've got the vertical bar, which is deep subject matter expertise, and then the horizontal bar, which goes across interdisciplinary to different areas. And so taking those two and then bringing them together, these T-shaped skills are what hiring managers say will be the most important going forward. So it's really about having that whole picture, figuring out the solutions for your clients with all of their objectives. I think risk, return, and impact now too. So there's a lot of advice in there, but be flexible, add skills, and think about the combination of skills and network.
Yeah, and maybe that's true of everything, right? We all need to be good generalists, but if you want to differentiate yourself, you have to have some kind of expertise on something that stands out. So there is the trick.
Indeed.
The trick in the tea.
Exactly.
So Rebecca, I want to thank you so, so much for taking the time to chat today. Again, I recommend everybody go to the CFA Institute website, read this report. It's called The Future of Work. It is chock full of really interesting data, really interesting surveys, and a lot of recommendations. If you are working in the investment industry, if you're interested in getting into it, or if you're an end client of this industry, there's a lot of things there to digest. Thanks everybody for joining us. And again, thanks Rebecca so much for taking the time to chat.
Thank you.
Okay, I will.